Good morning. Welcome to my market analysis for 22nd of July, and it's Wednesday today. I want to share a different approach regarding how you can trade and not just sit on your hands in these market conditions where it's really choppy, and boil down your time frame to lower time frame, your analysis time frame to a lower time frame, and have more opportunities in the market to enter a trade. So today I will talk about that along with my today's analysis of where I think the market is heading towards. So let's start. If I look at daily, as I said, this is a range that we are in. So if I have daily as my bias, daily time frame for my bias, then I cannot take a trade in all of these days. So since last 2 weeks or 3 weeks, there's no trade in dollar index. There could be at least one trade which UCHF gave, but again, the opportunity cost is just really big to miss the opportunity. So what can you do? It's the other thing that you can do is shift to a lower time frame for your higher time frame bias. So instead of daily, I go to 4 hour for my bias for today. How do I set my bias? First, let's understand how the market moves. So we have a shift in trend uh, like this, and then market pulls back, expansion, pullback, expansion, pullback, expansion, and then consolidate, and then again either pulls back or reverses back. So if I if I keep this in my mind and the bias time frame, I shift from daily to 4 hour. Now let's see how market moves. We have an expansion. How do we know it's an expansion? We get the bullish wave element. We have a pullback. We have an expansion. We have a pullback. We have an expansion. What do I expect next? A pullback and an expansion. Now, it's clear that dollar index is in uptrend in 4 hour time frame. And where do we get the expansion start from? From the FPGs. Yes. And today I'm expecting price to come and tap into this FPG and continue going to the upside. If I look closely and if I shift my chart here, these are daily candles. So let's go to daily. What does daily candle do? Daily candle makes a wick, pushes up, opens, goes down, makes a wick, pushes up, opens, makes a wick, goes down, makes a wick, pushes up, opens, makes a wick, and pushes up. Till where can it push? Where is the drawn liquidity? Is the next question. So I see it being here. This is my drawn liquidity. So I have an open space till here. I'm expecting price to reach here. And from where? From this fair value gap. So why don't I wait for price to come into fair value gap, give me a confirmation, and then I trade it to here? Same as yesterday. I'm expecting price to reach this. So the dotted line, the horizontal dotted line, these that you see, this is a new day open. So this was previous day. Price made FVG. Next day opens. We make a daily wick. We come down. We tap into a day before FVG, and then we pushes up. Do we have an FVG yesterday? Yes, we have a bullish FVG yesterday. The yesterday candle was really good. What do I expect? I expect price to come into yesterday's bullish fair value gap and then continue going to the upside. So if I had to take a trade today, I would wait for price to tap into this FVG, which is yesterday's FVG, and I can confirm that 4 hour is in an uptrend, which is how do we know it? Price is making high highs and high lows, and we are getting bullish fair value gaps. So again, what is my point of interest? My point of interest is yesterday's 4 hour FVG. which is this. And I'm expecting price to go down. So on this is daily time frame, it will make a wick and enter here, and then price pushes up for today. So instead of zooming out like this, I'm just zooming in and I'm looking at current 4 hour time frame trend along with the fair value gaps it forms. Then I'm asking myself a question that if yesterday close was like this, which is confirmed by 4 hourly trend, so the trend was up, what do I expect price to do today? I expect price to first go down, make a wick, tap into some kind of point of interest, which could be a fair value gap or could be a swing low, and then push to the upside. So again, the same question today. What's the 4 hour trend? The 4 hour trend is to the upside. Is there any bullish fair value gap? Yesterday. I don't need to look for day before yesterday. I don't not need to look there. I just need to look about yesterday's fair value. Do we have? Yes, we have. Now, what's do we have an open drawn liquidity, which is this one? So do we have open space for price to reach to this level? Yes, there is nothing in between. So everything points to me that today I'm expecting this to make a wick, 4 hour. We tap here and we continue pushing to the upside. So I will use this methodology to make my analysis from now on. Daily time frame is just too big, and I get more opportunities if I use 4 hour for my uh, bias setting for the day. And another thing, if I use 4 hour, that means that I'm just using one daily candle. So yesterday candle was bullish. We have a 4 hour gap and the trend is up. So I'm expecting today make a big push up. That's it. So my bias for DXY for today is bullish from this fair value gap. That's not it here. Let's look at EU. So again, the same question. This day we had a bearish push. Did we have a fair value gap? Yes, we had. What did price do? We came, tap into fair value gap, and we pushed to the downside. I don't need to zoom out this much chart. I just need to look for what's happening today. So yesterday, what happened yesterday? Let's see. Daily candle, such a bearish candle. What am I expecting? What I'm expecting today's daily candle to do? I'm expecting today's daily candle to go up, make a wick, and then turn around and continue pushing to the downside. Let's see if we have any open point of interest. Yes, we have. This way. This one will be my drawn liquidity. So we have clear space till this for price to reach. Do we have a fair bearish fair value gap? This one. Yes, we have. So again, what am I expecting? I'm expecting price to tap into the fair value gap and continue pushing to the downside till these levels. The same as price did here. We got a bearish tap into fair value gap, push down. There's no fair value gap this day. So price, you can skip this. We have a bearish fair value gap. We tap into bearish value gap the next day and we push to the downside. Again, we have a bearish value gap. 4 hour trend is down, which we can now buy. Price making lower lows every time and giving bearish fair value gaps. Next, we have an FVG. I'm expecting price to tap into this bearish fair value gap and then push to the downside. So it's really simple. Daily's candle is now forming a wick and it will soon after tapping here go to the downside. This is what I'm expecting for price to do. And also there is one more swing point as well, which is yesterday's high. So this is also an important level. So if price fails this, then I can look for price to sweep this and continue because this is yesterday's high. Yesterday's high. So this is a significant level. Also a swing point from a bearish fair value gap, which is also a significant one. Let's look at GU. Again, bearish day, we have a bearish fair value gap. Price tap into it, we go down. Next day opens. Do we have any bearish value gap? We have a day before. Price taps into it, goes down. Day closes. We have a bearish value gap. Next day, price opens, tap into bearish value gap, go down. What was yesterday's candle? We had a good bearish candle, which I can see by 4 hour, making lower lows every time and giving me bearish fair value gaps the way. Now, what do? I mark the bearish 4 hour fair value gap. I expect price to go up, tap into the fair value gap, and then go to the downside. Do we have open range for price to go to the downside? Let's look at daily time frame for that. Yes, we have. If I look here, this will be the drawn liquidity where I'm expecting price to reach eventually. So today's candle goes up, tap into the fair value gap, and turns around and turns bearish. So again, same as uh, EU. Also, this will be the sweep level. Why? Because it's a lower high point, it's a swing point, and it's yesterday's high. So it is also a good turnaround point for price to go down. Although it is really far, I'm not expecting price to reach here. But again, let's see. UCAT, bullish move, bullish candle close. What do I expect next day? To open, go down, make a wick, and then turn around. What do? We open, go down, tap into the fair value gap, and then push up. What happened yesterday? Yesterday candle was bullish. How do we know? 4 hour making higher highs, 4 hour making bullish fair value gaps. What do we do now? We mark today's fair value gap on 4 hour. And what I'm expecting price to go push down into the fair value gap, which will make a wick on daily time frame, and then continue pushing to the upside from here. Do we have open range? Yes, we have a lot of range. There's no, this could be a swing point. This could be a draw liquidity because price stayed here for 2 days. And then today's candle goes down, tap into this 4 hour fair value gap, and then we continue pushing to the upside. So again, as you can see, the XY is bullish for me, EU is bearish, GU is bearish, and UCAD is bullish. So it's setting up really nice as well. UCHF, what do we have? Day before yesterday, bullish close, price making higher highs. We broke the structure, we close above. What do? This was day before yesterday. Yesterday we open, we go down, trade into the fair value gap, and we push to the upside. Daily opens, makes a wick, push to the upside. What am I expecting for today's to do? Do we have a drawn liquidity? Yes, we have. This is really clear, drawn liquidity. What I'm expecting price to do today? I'm expecting price to open, go down, trade into the bullish FPG, and then continue pushing up. So daily candle open, goes down, makes a wick, and then continue pushing up. So same as other pairs, we have a bullish fair value gap. We have a price reason for price to go to the upside. So just same as others. We have drawn liquidity. There's nothing in between. So bullish on this. Gold. If you remember in yesterday's video, I said if we close above this, I'm expecting for price to go to the upside. But do we need it? Do we really need it? Again, yesterday's candle. So this was yesterday. Mark first look for 4 hour trend. 4 hour shifted its trend from this point, and we started making higher highs and higher lows, higher highs and higher lows, which we can know by market structure, also by price making bullish fair value gaps and respecting it. We did not close below the bullish fair value gap yet, so price is respecting its uptrend. Now we cannot mark this bullish FPG. The reason being it's today's FPG. So just imagine this is today's daily candle. We open and we continue pushing to the upside. And by the time we will come back and tap into the FPG, how would the daily candle look? Daily candle would have made a wick, a really big wick to the opposite side. We want bullish structure. So we want open, low, high, and then close. What will price do? Price will open high, low, and then close. It's not ideal. What do we want? We want price to tap into yesterday's fair value gap, yesterday's bullish level. But again, it is too far. If price goes here, it will do two things. First of all, it will break the fair value gap. Price did not break. Price respects the fair value gap if it's in a trend. So if we get a close like this, we violated this bullish fair value gap, and then we continue closing, continue going to the downside. So the daily candle will from bullish would be turned bearish, and then the range of today is done. The complete range is done. That's why it's always best for price go up, close here, next day opens, go down, and then push up. But what is gold doing? Gold is next day open, pushing up, and then it will go down and get. So it's not ideal. By the time price reaches here, it will be already bearish, is what I mean. So for gold, there's no structure for me here. What can I do? If price continues going to the up and stays bullish today on 4 hour, then tomorrow I can mark this bullish fair value gap, or maybe another one forms, and then I can expect price to come down tomorrow, tap into fair value gap, and then continue pushing to the upside. Where's the drawn liquidity? Where's the price gonna go? We have a drawn liquidity here, and the next one being the obvious one, which will be this one. So I will not look into trading gold. It's already reached my drawn liquidity. It's already turned a lot of bullish. There's no sense in taking buys in gold, so I'll hide it now. Now comes a really important part on how would you enter these markets, and it's it's really um it's a new it's not a new concept, but it's something that I started looking very recently. Uh, so this is the indicator that I'm using. It just marks Asian range. It's FXN, FXN Asian range indicator. If you type it here, you'll find it. So what it does is it marks Asian session, London session, and New York session. So now we are in Asian session, Asian, London, New York, Asian, London, New York. So what it does, let me open gold. I will explain here so I don't ruin my charts. So this being Asian, this is London, let's say, and this is New York. So, and this is New York. So price moves in sessions based on time rather than based on price. This I learned by looking at my data and realizing that where most of my losses occur, most of my losses occur is in session. And so what price does is, let's say yesterday we are going to the upside. Today opens Asian session being Forex market is traded by banks. So the Bank of Japan trades it, Australian market, all of this market trade in Asian session. So not a lot of money. So what price does is either it pulls back or it just consolidates. There's no movement. Most of my losses that I took are inside the Asian rate. I trade this, price doesn't go somewhere. Then when the London market opens, which is 8 a.m. London time and 12:30 my time, price suddenly goes down, sweeps the low that is set by Asian session, and then continues going to the upside. if it wants to go from a bullish point of interest. And then New York opens, price pulls back, and then continues going to the upside. This is how price is moving all day. I'll show some examples and I'll talk about it in uh, upcoming daily analysis so it gets more clear. So again, yesterday my bias was bearish. This was a bearish fair value gap. And let's go to 15 minutes. So the blue range is Asian range. That means from this time to this time, Asian market was open, which is very low on volume. What did Asian market do? It pulled back into the fair value gap, the bearish fair value gap. Now, the time London opens, so the green box, this time 12:30 my time, London open. It went up, sweep all the liquidity, and then turned around. We break the structure, we get a change in state of delivery, and we continue going to the downside. Next, New York, we continue. Okay, this could be in coincidence. Let's go and look a day before. So a day before we had a bearish fair value gap. This is the bearish fair value gap. Asian, you take a trade here thinking, okay, it's a change in state of delivery. What does it do? London opens, price goes up, manipulates, pushes down. This is accumulation, this is manipulating price, and this is continuation to the downside in New York session. So you take a trade here or you take a continuation in New York. What happened the day before? Asian session. London opens, takes out the stop losses of Asian session. That means manipulates it, pushes to the downside. It keeps happening every day in Forex market. Look at you, what's happening? Asian session, we sweep its high, London, and we continue going to the downside. New York continues. Next day, Asian session, we sweep high, continue going to the downside. Next day, Asian session, London opens in green, go up, sweep, continue going to the downside. New York continues. Asian session, London opens, sweep, continue going to the downside. So I don't need to trade in this time. Start trading from this 11:30 to 1:30 and then New York. So just London open and New York open is more than I need. So what I'm expecting is Asian session for price to reach to the fair value gaps in all, and then London opens. We manipulate, we tap into the bearish fair value gap. If I get an entry in the first 2 hours of London open, I take it, or else London manipulates, then New York open, I take a continuation trade in New York. So this, let's say Asian close like this. London open, we manipulate, we go down, and then we close back up. And then either I take an entry here in the first 2 hours, or I take an entry in New York continuation. So price sideways, manipulation, and then we distribute to the upside. So this is how I'm using price. You can see here, accumulate, we manipulate, that means price tap into fair value gap, and then in New York we get a continuation. We accumulate, London opens, we sweep the liquidity, we take out all the stop losses in Asian range, and then we continue going to the upside, and in New York we continue to the upside. This is how I will be using the daily profile, which is Asian, London, and New York, along with my bias, which is 4 hour trend, along with daily candle, and looking for price to make a wick on daily candle first and then pushing to the upside from a point of interest, which is either an FPG or um, no, or the swing point. And one more thing to clear, this is, I will be removing this, the reason being, by the time we reach here, we would already have invalidated the bearish fair value gap. So that means the momentum would have been bullish. So I was wrong here. I just realized This is not a valid swing point till then. Again, I'll be removing it. It's not a valid swing point. So I'll be only looking for price to go up from bullish fair value gap as of today. If I get an entry, that's fine. In the specific time, 2 hour window and the next 2 hour windows. That's all. I'll keep updated about my entries and I'll keep explaining about these session entries in the upcoming videos as well. Thank you and have a wonderful day.